What up, world? Nicholas Coriano here to share with you guys some of the expenses you want to be thinking about when you're putting together a financial projection for a real estate investment. I've invested I got 29 apartments, a bunch of commercial units in upstate. They're all in upstate New York. I got some land in Nevada, Arizona, New Mexico, Michigan. Went to business school, went to law school, and I write business plans full time. So I guess that's why maybe you want to listen to this video for the next few minutes while I run down some of the things you should be thinking about. So let's get to it. Real estate taxes. You get these in all shapes and sizes. Sometimes they're county taxes, sometimes they're village taxes, sometimes they're city taxes. I've seen water taxes, I've seen view taxes. So you want to check with the county that you are purchasing the property in to know exactly what taxes are coming down the line. But at the very least, you want to allocate space for your taxes. Taxes are usually, I've seen school taxes as well. Taxes are usually, once a year. Some counties or cities split it up into twice a year. And you want to allocate that. So then, in addition to that, you want, if you're doing a real estate investment, like let's say a 4-unit, we'll do a 4-unit, a single family, some land, and a hotel as an example. So if you're in a multi-unit or in a house, you want water, electric, unless the tenant is paying for that. If you're in a multi-unit building, there's always water or electric bill. Usually the water is not split up, but there are cases if you build new or they did the plumbing different, they could shove that off to the tenant. But usually it's that's the landlord thing. Electricity, you're gonna have to pay for the common space electricity, so you don't have to pay for tenant electricity, right? They pay for that. But if there's a hallway or outside, there's a common space which you have to turn that on. Keep in mind that when you purchase real estate, sometimes the water, sewer, or electric make you put a deposit down. So even though, for example, my electric bill on one of my properties is like total, I think it's like $400, $500 a month, but they charged me $1,500 just to turn it on, just to turn on the electric. So when you're putting together your business plan and your financial projections, keep that in mind. So water, electric, trash. Some towns, have trash for free. You can throw your trash out in the front. Some towns it's not like that. And if you have a multi-unit or a hotel, you're definitely gonna have to pay for trash on that. So taxes, trash. What other bills have I got? What do you call it? One town has it for a heat inspector. So they come in, they call it a furnace. New York State has a furnace inspector come in once a year. I was like, holy, let me see your badge. I was like, I couldn't even believe it, right? But you're gonna get little things like that where they come in and they inspect it and you have to pay for it. So a furnace inspector was another bill. Taxes, water, sewer, insurance, your building insurance. You're gonna need building insurance. You're gonna need the renter, especially if you have renters or you're renting out. You're gonna need the building insurance. Maintenance and upkeep, it's inevitable, right? Cleaning, so just cleaning the hallways on a multi-unit or cleaning the outside of a house to take care of your investment. You're gonna want to put that line item in there. Landscaping. So I'm not saying put in a bunch of flowers, but in the winter, if it snows, you got to clean it up. If there's any debris that comes down, you got to clean it up. Any grass that grows, you got to cut it. So landscaping is another bill. And by the way, if I miss anything, hopefully there's other real estate investors watching this video. Put them in the comments section if there's anything else. Vacancies. Vacancy is a cost. Breakage, right? Anytime you can usually put that on the tenant if it's their fault. But it's inevitable that something's gonna break. Light bulbs in the hallway that you have to replace. You want to have those line items in your financial projections in your business plan. Banking fees. There's going to be a cost to transactions, whether it's your receipt books. Like I have a receipt book right here that I was just collecting rent, right? Collecting rent. Appliances every 5 to 7 years if they're not brand new. If they're not brand new and you're buying into them, expect to buy appliances soon. And then depending on how depreciated the asset is or how old the building is, you're going to have to be thinking about, new roofs or just new siding or new windows, etc. So gas, electric, water, I think we covered most of what I'm paying every month. Waste management, I'm trying to think of what else I get bills for. Electric, water, gas, trash, insurance, any mortgage payments. Don't forget about your mortgage payments unless you're buying it cash. I have some of mine that I don't have mortgages on, but your mortgage payments, your any interest payments, and lawyer fees when you acquire. You're gonna have lawyer fees. You're gonna have closing fees. The county's gonna usually taxes you. There's usually a transfer fee when you actually purchase it, so make sure to include that in there. And I think that's about it. Not like it's a little bit, it adds up, but those are just some things. If you had never written a business plan or you're looking to, start real estate investing, make sure you look up at least those basic fees. So anyway, I hope this was helpful. If you need help developing a business plan, you can hit me up. If you want to do it yourself, which you probably should be, you should get really deep into the numbers and constantly be researching that. I have the business plan and financial projections template below. And I have other videos on this channel that teach you guys how to use the financial projections. They're pretty straightforward if you know how to use an Excel. So hope you guys are great. Never give up and take the leap. Invest in real estate. It's been wonderful to me. It's been bad to me, and it's been wonderful to me again. And so it's a process. It's a learning process, but the best way to do it is to do it. And I guarantee you won't regret it, man. It's a great feeling to own a lot of real estate, and there is a sense of security that you have when you own it. So hope you guys are great. Talk next time.